Good morning. I am Renuka Devi. I am working as an assistant professor in Dr. S.N.S. Rajarashmi College of Arts and Science in Business Administration Department. Today we are going to discuss about the sources of finance in various entrepreneurs they have to avoid for the business to start. In case of their particular business, we have to increase their business need funds to meet various type of requirements. Similarly, there are numerous sources will be happening in the business that can procure the activities. Again, the funds may be required for either the long term or the medium term or the short term periods. In case of sole entrepreneurs, that is the main sources of finance is an individual principle. They have to make it as a partnership concern. The various partners jointly they have to contribute their funds. This may be happening in the supplemented in each case by the borrowed funds from their friends or any relative circle, and their sometime they might be getting the loan from the banks also. So these are the some important sources they have to recur the fund itself, but their capital requirements at that time they have to comparatively very little, and also the which firms the need to seek for the various sources to procure the financing. So at that time the but major large scale industries, suppose if you are taking the large scale industries, they have to organize in the form of joint stock companies, and also their financial requirements will be making in the also very huge. So at that time they have to make the seeking the funds, either we are going for the some category of either the long term finance or the short term finance or the medium term finance. So therefore the companies should resort to all methods of raising the fund in the top level, all the available sources. So the method of raising finance, when we are going to take it in the sources, might be we are classified in the three category. So according to the length of the period, the period in the sense is based upon the fund we are going to require to regain it. Okay, so that sources of raising finance may be entirely classified into three important categories. So first one is long term finance, medium term finance, and the short term finance. So when we are supposed to take the long term finance, at the time we have to issue the shares to the public, either the shares or the debentures, or the some time we have to raise the finance from the some financial institutions also. So and also the back of profit, bluffing back of profit. So it's nothing but suppose in the company they have to make the some profit, they have to retain for future purposes. So at that time they have to make the finance, they have to raise the based upon that finance they have to raise it and get into the business industry. They have to use it for the further purposes, and also we have to take it in the second category. We are going to classified under the medium term finance. So suppose if we are taking the medium term finance, we have to raise the fund in some important cases. For example, we are going to issue the redeemable debentures. Okay, so that time the redeemable debentures we are going to issue to the public, they have to get the amount from the public, they have to collect it, and we have to invest in the business to raise our business profit. And next category is financial institution. So some important financial institution they are going to increase their funds, they have to develop the business for the entrepreneurs itself. The next third category is public deposit. So suppose we are going to get the fund, we have to raise the finance through the deposit amount, we have to collect it from the public. Public is nothing but us, like the people, we have to invest their fund in the some important commercial banks, and also the some government debentures, or the some deposit categories. And next we are going to take it in the third category, short term finance. So based upon the raising finance, we have to make the length of period in the under the short term period is nothing but below 1 year. We have to raise the fund. So trade credit, example we are taking consumer credit, installment credit. So these are the some important financial structure we have to make it and the short term finance category. and bank credit, accounts receivable. These are the some important example. We are going to raise the fund to develop the business in the entrepreneurs.